Good evening, everybody. Nice summer evening here in Pittsburgh. Nice clear skies. We are doing. We've been having people request quite a bit uh, when to take profits. That seems to be a big bugaboo in most people's trading. So this is kind of to fit in with our trainings that are coming up. This Saturday, we're going to be doing a full day training again on option trading of what option strategies you want to apply to the appropriate candlestick signals or patterns. And this is for the person starting from the beginning, not even knowing how options work, to the person that's been trading for quite a while. So we go through the basics of options, the terminology, how they're used, and then most importantly, how we apply them correctly for the different strategies, which are all very simple. We're not doing the condors or the iron butterflies or things like that. It's just simple spreads, credit spreads, debit spreads. But that is then to lead into the reason we're doing the profit taking is because the biggest problem most people have in their trading is their own emotions. The reason that you're going to get such a good training is because you're going to be learning from one of the worst investors in the world before candlesticks came along. I did everything ass backwards because that's what most people do. That's why the candlestick signals are so effective, is because they show what normal human nature does, which is usually backwards from what we're supposed to be doing. Going with the old philosophy or the Japanese, not philosophy, but observation, where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. We now can just use the graphics of candlestick signals and patterns to show us exactly where the panic sellers are and where the smart money is coming in. So when I finally figured out that I wanted to be 180 degrees opposite of what I normally did, then I figured out I was doing what the smart money was doing. So taking profits is one of the hardest factors that a lot of people run into. A lot of people will take profits for the sake of taking profits, which is goofy. If we're looking at charts that are telling us what is happening in investor sentiment, the old adage, we want to cut our losses short and let our profits run. Well, a lot of people will not let their profits run because if you were like me before candlesticks came along, if I was lucky enough to have a profitable trade, the last thing that I wanted to do was let it turn into a loss, because boy, would I look stupid if I had a profitable trade and it turned into a loss. How do you determine when EMA is too far away from price? We'll go into that, Tony. That's all part of this. So you don't want to take profits just for the sake of taking profits. Now, there's 5 ways that we kind of factor in that we can use candlestick signals, candlestick analysis to tell us when it's time to take profits. Obviously, the most important one is the sell signals. Then the gap ups in the overbought condition or oversold condition, depending which way if you're long or short. How far away you are from the T-line, setting safety stops, and here's the one that will be concentrating on September 26th, is how do you anticipate when it's time to take profits? Yes, these sessions are always recorded. So first of all, Jace, are you in here tonight? The first thing anybody needs to do or should be doing is learning the candlestick signals. I don't see Jason here tonight. So bread and butter, bricks and mortar, ABCs of candlesticks is the 12 major signals. And they're not difficult to learn. So the berry signals are these, and you should know these by now. Or and if there's only 6 or 7 here because some are duplicate, but there's going to be the difference between the mechanics of seeing the actual signals and the anticipation of when those signals are starting to coming into play. So again, the sell signals are your number one criteria. This is why you saw in the afternoon comment of, I think it was Wednesday, to be on alert that they've gapped up in the overbought condition. Again, the Japanese rice traders tell us if you see exuberance at the top, which includes big price moves away or a big candle and or a gap up, that's illustrating exuberance. Now there'd be so just that fact alone is one of the factors that you want to keep in mind, because it'll always, I mean, the normal reaction to most investors like myself before candlesticks was, boy, we're really going to make lots of money. Things are going great. And then all of a sudden they start selling off, and you think, man, everything was so good. Why didn't I take some profits? Now at least you can be prepared for that. So it's either the exuberance at the top that we saw in the Dow or that signal at the top, the hanging man doji that we saw in the NASDAQ. So once we saw that, now we've got a new evaluation that if they're selling off, what's our strategy? Probably going short things until we see it hit a support level, which the NASDAQ did today. So again, top case for reversal is the reversal signals, the stochastics, and the T-line. So a lot of people say, well, how long do you hold on to a position? Until you see a sell signal. This is the very simple selling strategy. You stay long until you see a sell signal and a close below the T-line. And I'll reiterate the T-line rule, that any time you see a close below the T-line after a sell signal, here's something you write and put it as a stick 'em on your computer screen. If you see a sell signal and a close below the T-line, the probabilities have now gone dramatically in the favor that a downtrend is occurring. I mean, that's as simple as the T-line rule is. As soon as you see something close below the T-line, the uptrend was pretty apparent. When was there a change of investor sentiment? When they did a sell signal and a close below the T-line. Add another factor like resistance, that if we can see the reasons that a sell signal is occurring, like at a resistance level, just obviously where's everybody likely to be taking profits? At a resistance level, such as a major moving average. And if you can see that you're already in a downtrend and they bring it back up and you start seeing sell signals at a resistance level, this is where I say observe the obvious. The obvious was that's where the selling started again and continued the downtrend. CB, it closed right close to the 50-day moving average. If you can, the visuals of candlesticks allow us to make a better assessment of where they're selling. There's our gap up doji, bearish signal, bearish engulfing signal, close below the T-line, and where did they do it? Right, the same level that topped out before. So this is not rocket science. This is just classically, not classically, what's the word I'm looking for? Just adding everything together. Sell signals in the overbought condition, at the same level that everybody else might be watching as a sell point, that just gives you that clue right away that it's time to be taking profits. We have simple rules on different patterns. If you're in a 45 degree, what's our simple rule? You stay long until you see a sell signal and a close below the T line. A second factor is gapping up. Where do most people buy? They buy exuberantly at the top. If you're seeing an uptrend, an uptrend, an uptrend, where do you think investor sentiment is going to get the most confident? The further they keep moving up and it doesn't sell off. This is, as a candlestick investor, you get ready to start taking profits when you see that exuberance. If you see the gap up in the overbought condition, that's that exuberance that we can see right away. So anytime you see a gap up in the overbought area, get ready to start taking profits. In this case, we'll jump ahead a little bit. Look how far away it moved from the T line. Glad you have it here, Chris. Exuberance at the top. There's your sell signal. A doji and then followed by a bearish candle. There's your evening star signal. That was your alert to start getting ready to take profits. As we go into our stop loss, if I see a doji in the overbought area, it's got two directions to go, three directions, flat, up, or down. What do we know about a doji? It's going to trade in the direction of how they trade it up here in the overbought area. I just use the low of the doji because logic says if it comes down through there, where is it heading to? It's heading back to the T line. You can always make another decision once it gets there. Trading cattle, gap up in the overbought condition, start taking profits. Why? You're in the overbought area and the probabilities are starting to go against you. So even though we haven't closed below the T line, where do you think you're going to go after you see this gap up, indecisive trading, kind of a little evening star signal? Probably going to start taking profits back to that T line area. If I see something gap up like this and it trades up, very simple. You put your stop right here because logic says if they came up and then they have enough selling strength to come back down through the open, the profit taking is starting to take control. You want to be out of that trade. That's two ways to take your profits. Obviously, the other way is if you're way up here, what do we do then? We go to our 10-minute chart and see what it's doing on the 10-minute chart. We're doing kind of the Cliff Note version of all this, but the third one is the further away you move from the T line, the higher the probability it's going to come back and test it. This is just a classic case of exuberance at the top. We'd be going to our 10-minute chart to see about taking profits up here. Worst case scenario, you're taking profits as it comes back down through the open because where do you think they're going to take it to? Back to the T line area. The further away you move from the T line, the higher the probability it's going to come back and test it. This is the alert. The further away you move from the T line. So who was asking earlier, how do we know what percentage? You'll see it. It's not a numeric. It's just the fact that if it's trading up here, if it opened here and traded up here, you've got a big, huge green candle. Where's the T line? Way down here. That's telling you likely you're going to come back and test it. I think so. Oh, Tony? Okay. MV, I don't know. I just don't know. So again, remember, the T-line probability. And again, this is where you want to, If you walk away from anything tonight, it's the further away you move from the T line, the higher the probability it's going to come back and test it. And if you're in an uptrend and it closes below the T line, the probabilities have gone extremely strong that you're now in a downtrend. Take profits. If you see a buy signal and a close above the T line, the probabilities are extremely strong that you're going to be now in an uptrend. Doji and the overbought condition. What's the first alert? The doji. What's the second alert? The distance you are from the T line. That was created by this alert right here, exuberance coming into the trade. Where would have been the safety stop? Very simple logic. Right here at the low of the doji. If this opened positive and traded positive, yep, you still got a good trade. If it comes back down through the doji, remember the doji rule. To put it in a nutshell, there's only two rules that you really need to know to make a lot of money. The doji rule, which is the price will usually move in the direction how they open after a doji, and the T-line rule. The T-line will act as support after you see a buy signal to close above the T-line. You stay long until you see a candlestick sell signal and a close below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's time to take profits. Oh, that's right. There was no worst case scenario would be, if you need a recording, just email Abraham@candlestickforum.com. Say you were in the meeting, the session tonight, and could you get a copy of it? He'll send you the link. So what's the bearish harami tell you? That far away from the T line that the buying has stopped. When you see that gap up, that's your alert. Get ready to start taking profits. Another case where, uh-oh, did I do this right? Thought I hit, maybe not. Same scenario. If it gapped up, that was your alert. If it's trading up here, look how far away you are from the T-line. You flip to your 10-minute chart. If you don't sell it off your 10-minute chart, your safety stop is right here where it opened. Same scenario. When you move that far away from the T-line, get ready to take profits. 10-minute chart. There's ADAP. So we saw this not too long ago, a couple months ago anyways, on Tesla. Kept going up, kept going up, kept going up. How long did you hold it? As long as it stayed above the T-line. What was the alert? It started seeing some exuberance. And then they gapped it up again and traded up here. Now, when it's trading up here, observe the obvious. Ah, there you are, Jace. It was, I was using you as an example. The number one thing that you need to learn is make sure you know the 12 major signals. But if it's up here, what do? You flip to your 10-minute chart. And if it's way up there and it's trading up, I'm putting my stop right here. Keeps trading up, I'm putting my stop right here. Keeps trading up, I'm putting my stop right here. Keeps trading up, I'm putting my stop right here. That will get you out of a position. And why would you do that off your 10-minute chart? Because you've already been alerted to the fact that you're way too far away from the T-line. So identifying reversal signals, a candlestick sell signal, signs of exuberance at the top, price moving too far away from the T-line. When it does, you use it a lot. You utilize your 10-minute chart. Space, a while back, same scenario. What did you, how would you come out of that? You flip to your 10-minute chart, and you're probably starting to take profits right in here. Now, does this mean you got the ultimate at the top? No, we're not trying to get the ultimate at the top. We're trying to get that fat part in the middle. So once we see that gap up, what do we expect after we've seen it move this far away from the T-line? Expect it to come back and test the T-line. If you move too far away from the T-line, if you're short and they gap it way down, what do you expect? You expect it to come back and test the T-line. Where do most people sell? They panic sell at the bottom. So to alleviate being whipsawed when you're way up in the overbought area, very simple, safety stops. If you're that far away from the T-line, where is your logical place to not want to see it trade? Well, the ultimate place is they shouldn't bring it back down through the open of that candle that gapped up. You might use the halfway point of that candle, or the fact that when they're gapped it up that far, as soon as you close out the position. So that alert allows you to tell you, or that tells you, get ready, you're up in the overbought area, they're gapping it up. Where's the logical place to put your stop? Right there at the bottom of the doji. So this is not rocket science. This is just using candlestick logic that the Japanese rice traders have provided for us to tell us graphically what usually happens in human nature. If I'm in this one, I'm already aware that I've gotten too far away from the T-line, and then they gap it down. That's my alert. I immediately put a safety stop right here at the previous day's open. Because what's the rationale? If they gap it down and they start bringing it back up, well, I'm still in a good uptrend. If they gap it down and they come back down through the open of the candle that told us we're starting to get too far away from the T-line, where do you think the next target's going to be? Back here to the T-line. When can I overuse the 10 or 5 minute charts? What do you mean overuse? Use it too much? A lot of people will see, I'll find a chart, but a lot of people will just be looking at a normal uptrend, and they'll want to play around with a 5 and 10 minute chart. Key. Oh, that was yes. So this is the part that a lot of people need to get some latching onto. You don't necessarily have to have a sell signal to tell you, oh, it's getting ready. I mean, something's telling us there's a change of investor sentiment. We better have a stop someplace that's logical. So once we start seeing things roll over, if we're that far away from the T-line, a little, spinning top, same scenario as a doji is showing indecision. But if it opens lower, where do we want to put a stop? Again, at the low of that day, because where do you think the next target's going to be? So we're kind of anticipating that we're starting to run out of steam. We got a strong buy signal. There's your best friend signal. Has everything built into it that tells you want to be buying. A doji, right smack dab on the support level of the 200. They gap it up through the T-line and the 50 and break this downtrend. That tells you you're in an uptrend until when? Until you see a candlestick sell signal and a close below the T-line. However, there are going to be times when the market's starting to look soggy, and this is starting to look soggy. You may not wait until this day. You may start taking profits in here because what's the logic? Market's getting soft. You got good profits. Stochastic's overbought area. Maybe it could go up further, but I would rather close it out and go find another chart that looks like this. Does doji rule need to be in the overbought area, or it doesn't matter? If the doji rule works as far as overbought or in the oversold. Does the 3 EMA act as first alert before the T-line, and can we use that as a safety stop? You could, but the real factor I use the 3 T-line is if I see a sell signal and then it kind of wobbles in here and it doesn't, the 3 T-line doesn't come down through the T-line, it's telling you there's not a powerful sell signal yet. Get ready to, if you close it out, get ready to buy back in. But it acts as a kind of a little fluffy confirming indicator. So anytime I look at the signals, visually you can see immediately where is the T-line. We're starting to see indecisive trading. What is it kind of telling us? Well, maybe they're going to start not going up very much anymore, heading for the T-line. Worst case scenario, if the market's looking a little bit soggy, maybe I'm starting to take half that position off. Now, why do that when we don't have a sell signal to close below the T-line? Because look where we are. We're in the overbought area. We're starting to see selling, even though it hasn't completely confirmed by closing below the T-line. So if we're starting to see selling in the overbought condition, what's our probability factor? It's starting to go against us. Let's close out the trade and go find something that looks like this or something that looks like this, where everything's going in our favor. And what's the worst case scenario? Maybe after a few days it does a J-hook pattern. We can always get ready to buy back in. Are there times when I close out a trade and then buy it back higher? Yes, where I didn't used to do that, because if I closed out a trade because it looked like they were starting to take it down, they weren't going to fool me and get me back in so that they could take it back down and maybe take some more profits from me. No, sir, they weren't going to do that. Well, you'll find out that has nothing to do with you. You're just anticipating or evaluating what direction the investor sentiment is going. There's nobody out there to get you. So if I start seeing a resistance level, I'm starting to take profits before we get actually a sell signal and go find a better probability change. So that visual trend changing allows us to say, all right, things aren't as good as they were. The stochastics are starting to roll over. I haven't seen it close below the T-line, but I'm starting to see some selling up here. Let's start taking profits and go find a better trade setup. So this is all something that kind of goes on a flowing basis, that if you're trying to find charts that you need to get, or not say that's not the right word, charts that you want to get into, you also have to have the same ability to say, well, things are starting to look a little bit dicey up here. Let's go ahead and start taking some profits. Even if, in my case, where I rationalize that if I take off half the position and move it someplace else, that if it goes higher, at least I'm still making money on half a position that's in a high-risk area versus holding on to something where after 8, 10 days of trading, I'm giving back most of my profits from that time frame. This is where the anticipation part starts coming in. This is why scanning is important, because if I'm up here and I bought down here somewhere and I've got a good profit and I'm watching this, I'm not sitting here thinking, oh, I got to hang onto this because I don't have any other good place to put my money. If I'm doing scans and I'm finding every night 3, 5, 7, 10 good trades, and I've got one that looks like it's running out as far as steam, I'll close it out and move to that trade. Could this go higher? Yes. But if it went higher, it's in a high risk area where I might be finding another trade that is in a low-risk situation. So we can see pretty obvious what's happening at support and resistance levels. We can see whether they're selling here. We can see whether they're selling here. And that's just telling us we want to start taking profits up here, or we want to start taking profits here, because that's where the graphics of candlesticks are telling us everybody else is starting to sell. You don't have to be a expert analyst. All we have to do is see what everybody else is doing. So we have pattern expectations, such as a series of dojis. What's a series of dojis tell us? There's indecision. What do we know about indecision? That there's usually a change coming. I'm reading, does the T-line rule apply also when we are too far away down? Yes. Just very simple analysis. The further away you move from the T-line, the higher the probability it's going to come back and test it. Doesn't matter which direction you're coming from. This is telling me, oops, maybe it's time to take my profits and go find a chart that looks a lot better. So when I see something like this, we're saying, I don't know whether they're going to continue to move this up. I'm starting to see a lot of indecision up here. Let's take our profits and go find a better chart. The fear factor, and this is where I had to learn this myself because, again, being the worst investor in the world, one of my fears was that if I was ever in a good trade, I didn't want to sell it too early because, boy, would I look stupid if I sold it here and it just kept going right on without me. Boy, would I look stupid. That's because I didn't know what the market movements were. Now at least we've got a format or a playing field to tell us what's going on in investor sentiment, to tell us, yep, maybe it's time to get out and move on to something else. Not a close below the T-line until over here, but you had a sell, indecision, a sell. It was starting to look toppy, and look what your stochastics were doing. They're telling you, probably want to close out this trade. What's the worst case scenario? You could buy it on the next buy signal that told you a J-hook pattern was in progress. But what I've discovered through the years, when I did have a profitable trade, that fear of selling it because, man, what if it took off without me? And I was usually holding it all the way back here, and I'm thinking to myself, why the heck didn't I take profits up here? And I knew why I didn't take profits up here because I was afraid that it would go up further, and that trade that was going to make my fortune and I could buy a new car, new golf clubs, whatever, I wasn't going to get out. They weren't going to shake me out. And I'm looking at it down here saying, why the heck didn't I take profits up there? Observe the obvious. The investor sentiment is starting to change, even though you haven't closed below the T-line and you really haven't had a confirmed sell signal, but you're in the overbought area and you're seeing indecision. Or you want to be more alert to the fact that there is a resistance level. You're seeing a doji. You're in the overbought area. Put your stop in. Be ready to take some profits. I have discovered, this has kind of built my confidence over the years, that if I take profits when a chart looks like it's time to take profits, probably 85% of the time or greater, I am happy that I did, because we know what results are usually likely to occur based upon the nature of the signals and our indicators that help us confirm those signals, like being in the overbought area or getting near another resistance level. So very simple questions that I ask. Where is the trend? And are there any of my candlestick truisms there, like the T-line rule? Again, if you leave here with nothing else tonight, the T-line rule basically says if you close below the T-line, the probabilities have gone dramatically in the favor of a downtrend. If you see a buy signal and a close above the T-line, the probabilities have gone dramatically in favor of that uptrend starting. So with that, this is the type of thing that we're going to be analyzing or going into great detail on September 26th. That's the how to control your emotions, where to set your stops, how to get into trades with a much greater probability that you're in the right direction at the right time. What else do I have? And basically, what it did for me, or does for me, is creates the discipline that I don't have, or most people don't have. That if you stick with the rules, because the rules are there based upon the probabilities that are going to result after seeing a signal or pattern, that you're now not just shooting from the hip and hoping that you're going to be in the right direction at the right time. Okay, so before we go to live charts, are there any questions that I need to answer? Bill, yes, we do. Yeah, we do scanning sessions every now and then. We can always do another scan sessions one night, and they're not difficult. Once you put them in, you don't have to worry about changing them anymore. They're already there. Does the 34 EMA have any impact on trading decisions? It. Let's see, let me finish. Or is it just a level of importance for confirming or potential target level, especially if above the EMA crossovers? I don't trade crossovers. I mean, I don't use them. At 34, your major moving averages obviously are the 50 and the 200. That's what everybody watches. The 34 works, I want to say, relatively effectively, meaning you see a lot of support and resistance there at the 34 EMA. For what reason, have no idea. It's kind of a secondary support and resistance level. Now, the benefit of candlestick charts is the number one criteria for reversal are the signals themselves. Anything else you put on the chart is just a confirming indicator. The T-line obviously is what I consider the most strongest of all indicators, and that's because if you use the definition of a candlestick signal, which is the graphic depiction of investor sentiment, and the T-line acts like a natural support and resistance level of human nature with Fibonacci characteristics, when you combine those two, you've got a very powerful combination of seeing what's going on in investor sentiment. Let's see, so if you put the T-line on, that's because we can see what's happening if you use the T-line, what's going on in investor sentiment or support and resistance. The 200 and the 50 is what everybody else is watching. That's why we can see exactly what their decisions are at those moving averages, because everybody's waiting to make their decision at those moving averages. And then the 34 works relatively effectively. Now, when I say relatively effectively, because the number one criteria is the signals themselves or the pattern, everything else is confirming. If somebody says, put the XYZ indicator on your chart, if you put it on and it helps you, you keep it there. If it doesn't improve the probabilities of your trades, take it back off. Don't clutter up your chart. Pulling the trigger, yes, Mike. That's what that's another factor that we're going to be looking at. Is I get so many people say, "Man, I do my studies at night. I see the The trade, I know what to do, but I just can't pull the trigger. Got very simple logic on how you get over that hoopla. You think it's reasonable to trade just based on the T-line, like buying it when it closes above the T-line and closes out when it comes back below the T-line? Yes, but that's the simplistic method of doing it. Again, first of all, your number one criteria is the candlestick signal, and then the T-line, but then you've got the caveat that if you're too far away from the T-line, you start doing another method, moving to your 10-minute chart, either on the buy side or the sell side. But I could take everything off the charts and just have the T-line, the stochastics, and the candlesticks, and I could trade very effectively. Putting on the 50 and the 200 doesn't clutter up the chart, but it gives you a good visual of the playing field of where everybody's watching for where things might move to. And we've got the benefit of seeing exactly what their decisions are at those levels. Sometimes I stay in longer than I should. Because I am anticipating a 45-degree move from that point. As in Lind, there is a red candle. I'm hanging in for the 45-degree move. Is that the right approach? All right, let's do this. Somehow I can bring up. Yes, I have many questions. Had to log off and then get back on computers. Okay, glad to see you back, Jace. Lind. All right, so you have to ask yourself what made you buy this in the first place. Well, we kind of had a little J-hook bobble breakout with a doji sandwich. Have we gotten a sell signal? Not really. Not a dark cloud. It didn't open above the previous day. It didn't close below the halfway. This might just be a down day and an uptrend, and you're still above the 3T line. Oh, Jenny, who was asking? Somebody was asking whether the T line or the 3T line, if they're staying above the 3T line, if you're above the T line and showing that you're in a good uptrend, if you're staying above the 3T line, that's even more confirmation that the bulls are in control. So right now, you're in the overbought area. You might see some selling, but you don't have a sell signal. But I just put a safety stop right here. But if it came down through there, where do you think they're bringing it back to? Probably back to test the T line. Yeah, you could also do that, is draw a trend line up through there. But remember, the whole point of using the T line and the 3T line is the fact that it acts like a natural support and resistance level of human nature, with the caveat that the further away it moves from the T line, the higher the probability is going to come back. So just pick a spot and says, oh, I don't want to see it come back down through there. That means they are selling it off. Would you have gotten into ANF? Yes. There's wave one, there's wave two. When it opened lower, what did we put as far as a buy stop? 1368. So it opened at 1346. That wouldn't have played with it. But then when it started trading positive, what color was that candle showing us? Showing us green bullish candle. What are we expecting out of this pattern? More uptrend. So if they're coming back up with a green bullish candle after kind of this little morning star signal off the 200, it's doing what we expect it to do. Yes, we were buying this one today. FT, well, they're not market orders. If I put my safety stop right here, wherever, let's say it opened at 1346, if it came down and hit 1346, then it becomes a market order. RK will go through all these. So let's take a gander here. Here's a few that we're in that are working well right now. Obviously, the merger type stocks are working. This one has been my favorite because we had so much information telling us it was time to buy. Like right here, look at your big cradle pattern that broke out with a doji sandwich. Then you had a best friend, then a J hook, and then he still couldn't close it below the T line. What's our anticipation? We're in an uptrend as long as we stay above the T line. Now there was another one. I know it. I wrote it down. Oh, FMCI. Another one of these merger stocks. There's your fry pan bottom. This one also hasn't been able to close below the T line. Is it too late to buy SS or SHLL? Probably. If you're buying it now, bah humbug, it's on the basis that you're hoping it will go further. Here's one of the lessons that I've learned when I would look at something like this and think, oh man, should I be getting in this? Well, we're already up in the overbought area. It's already moved 80%, 20 to 55. Is that? No, that's over 100%, isn't it? Should I be buying here? And like everybody else, oh man, this looks really good, and I hate to be missing out. I better jump in. Well, that's not the best place to be buying. So the way I learned candlestick analysis was, this started an uptrend. What was the start of the uptrend? Maybe this. Then I eventually learned the cradle pattern, and then the fact that it supported right here on the 50 and closed above the T line. That's where I should have been buying. Now, that's because I can look back with hindsight to see what happened here. And that's what a lot of people say, well, you're looking back and can see that was the right move. No, you're looking at the move that created this move. So if the chart looks like this, at least now I start thinking, all right, there's my cradle pattern, and there's a possible doji sandwich breakout or confirmation. This is where I want to be buying, because that's what I'm expecting is, not expecting, anticipating it could be a move like this, but at least I know it's moving in the right direction at the right time. I don't know how far it's going to go. I just know I'm in the right direction at the right time. And now I can kick in my other simple trading rules. I'll just stay long until I see a sell signal and a close below the T line. Now what was I doing? Oh, so Abercrombie Fitch was another one that was confirming a pattern. You can see the fry pan bottom, and make this a little bit smaller, not too small. And kind of the J-hook pattern breakout, that was telling me I've got high probabilities this is going higher. Now remember, what we always have the problem with is, where do you want to buy? You want to buy with a buy signal in the oversold area. Where's a pattern breakout likely to occur? When you're already in the overbought area. Is that what they do? This is the problem with just buying the signals, or the symbols. Remember, we started buying this one right here. Let me make this bigger. Because of our cradle pattern. Now, this is what we call 2+2 analysis. Cradle pattern, right smack dab on the 50 with a close above the T line. Breaking out above the, or breaking out through this level. That was a high probability area to be buying because of everything we could see. And then what's our criteria after that? You just stay long as it doesn't close below the T line. Jace is confused, all right, about stochastics when applied to the sticks. Perhaps it's not, this is not the right time to ask. When rolling everything you have coming because I hear conflicting from the forum. I can wait until Saturday. No worries for putting it up there. And I can hear with what you have said. I have learned more. So what are you confused about? Stochastics. You want to buy the buy signals in the oversold area. Your pattern breakouts are usually going to occur when you're already in the overbought area. Is this getting too far from the T line? It could, except you have another little, whoops, there it is. It could be. So what do you do with this one? If it starts trading strong tomorrow and you know it's way too far away from the T line, what should you do? You start using your 10-minute chart. FMCI, you could be buying this one because you're not too far away from the T line. You are coming out of a fry pan bottom, and you're doing it with great enthusiasm. And again, you buy signals when they're in the oversold area. You can buy a pattern breakout when your stochastics are probably already in the overbought area. On shield that you are showing, that down day and the price mitigation below the T-line, even though it did not close below, tempted me to get out, but I stayed in. What signal should I look for to stay in it? Just very simple. Just a very simple rule. You stay long until you see a sell signal and a close below the T-line. It would have been scary, but you still have to go by the rules. Because if it was down here and you were ready to close it out, where are you? You're already down there. So why not wait to the end of the day, unless you thought it was going to come all the way back down here? If we're in an uptrend, and there hasn't been a confirmed sell signal yet, there's nothing hurting to stay with the probabilities that you wait for it to close below the T-line. Do you find that doji sandwiches in an upward reversal against a major downward trend fail more often than not? 90% fail today when trading the NQ futures on the 1-minute chart. Steve, the 1-minute chart is a toughie to trade. I mean, the 1-minute chart is basically buy and sells, not a trend. So even if I was trading intraday, I'm going to use something like, at worst, a 5-minute or 10-minute chart combination to keep out the little whipsaws, because a 1-minute chart doesn't really tell you anything. It just tells you somebody's buying, somebody's selling, somebody's buying. It doesn't tell you what the overall trend is. But 2 days before that, Shill was far off the T-line, and then the red candle would have scared me. I don't know why I stayed in. I'm glad you did. Okay. For intraday trading, what time frames are popular apart from the 10 minutes. Aren't 30? That's up to each person, Jenny. If I'm intraday trading, what did I do today? I did hogs. Didn't do very well today. But this is your soybean chart. Now, if I trade off my 10-minute chart, and it hasn't been very good recently, but there was a good trade here off the 10-minute chart where you had a sell signal, and then look what happened all the way down. Didn't have a buy signal covered until up here. So this would have been tough, but a little wedge. Would have been buying right here on the breakout of the wedge and would have probably closed it out in here or somewhere in here. So I use the 10-minute chart. Now, if that's too active or not active enough, you can flip to your 5-minute chart. I use a combination of the 5-minute and the 10-minute. If it's too active, you flip to your 15-minute chart and maybe your 15 and your 30. So it all depends on how active you want to trade intraday. That was my concern on Shill. It went too away from the T line, so that got back in today. I don't know what all those words said. So you did get back in today. For day trading entries, you would use the daily and then find the trade with the T line on a smaller, yes. If I'm going to trade something, let's say I can see the daily chart is telling me we're probably in an uptrend. That means I'm probably going to be trading a little bit more biased toward the long side. If I see a, right in here, I probably wouldn't even be trading soybeans because there wasn't really any direction. It's when I could see the pattern that I would start trading this intraday to the long side. Let's see if I can find a reverse one. Or something like on a daily chart, I'd be more oriented toward trading to the short side on an intraday basis. Whoops, I get way off track here. Here's what I wanted to illustrate is look what the patterns are doing. This was workhouse, fry pan bottom. Look what it did. Tupperware, kind of a fry pan bottom. Look what it did. And I say, look what it did. Look what the markets have done in the last few days. I mean, they just got slammed. Look what happens to a price pattern. May not go up, but they hold up a lot better because this is a buildup of investor sentiment and not going to be as much influenced by the overall market. I am not a day trader. I'm a swing trader. Okay. Are you concerned the price closed halfway? No. Doesn't matter where the price closed today. What is the pattern that we're looking at? A fry pan bottom. And where are we trading? Still above the T line. What's the rule of a fry pan bottom? You can stay long as it doesn't close back below the T line. Does the 4 hours also work? Yes. Find what works for you as far as the time frame you're comfortable with. If it is popular for day trading, use it. I don't usually go out to 4 hours. Well, unfortunately, 4 hours for soybeans. I don't even know whether I got 4 hours over here. I don't think I do. I've got the 30-minute, 60-minute, and the daily. I guess I could probably put 4 hours on there, but I'm usually not holding on to positions long enough to have a 4 hour. Yeah, hold on for a second. Let me get through the ones that everybody likes to look at. Netflix. Whoops, I'm on the Netflix has pulled back after it closed below the T-line, right smack dab to the 50. What were you telling me, CB, that's on the 50. Show us a stock that you have a call option at present. Oh, I've got some big profits in this one right now, and this is what we're going to be going through on our option trading. Is not only do I have calls that are acting well, but as I saw this setting up as a fry pan bottom, I started buying spreads. That way I had less money exposed, but the percentage return, if the price moved the way I expect it to, would be dramatically improving the profitability of that trade. And I bought, let's see, Abercrombie Fitch. I'm going to be using this one as an illustration this weekend because right off of here we started buying calls because it was doing kind of our bobble breakout, J-hook pattern. And it's got good profits. And look what this did over the last couple of days compared to what the market did. So I've got puts over here on home. Ever since the kicker signal. Now remember, this is the last 3 days of trading and what the market did. That kicker signal occurred before the market sell-off. So that kicker signal told me there's more downside. Now it did an inverted hammer today. That makes my playing field or my strategy very simple. If they start trading this positive tomorrow after an inverted hammer, I'm probably closing out my short position. But because stochastics aren't in the oversold area yet, and more than likely because of the force of a kicker signal, if there's any weakness tomorrow and it opens lower, I'm suspecting they're still bringing it down to the 50-day moving average. Tesla is on the 50. Yes, right smack dab to the 50. Okay, and Apple, that one, after the left-right combo, and then to close below the T-line. Remember what we saw all the way up, right up until here. But we saw the little J-hook pattern setting up. But you can see how the T-line has been an influence this whole way up until we saw a sell signal, one of your strongest ones, a left-right combo, and a gap down. Where do you think the likely target is that everybody else is watching? Down here to the 50. Is Tesla a bargain? Tesla a bargain. Buy now at the 50. No, wait for confirmation. You don't know whether they're going to open this lower tomorrow and go to the next target or the next target. That's right. It could be a better market at 180. On Apple, is that what you're looking at? No, I wouldn't be a buyer of this on positive trading unless it stayed up. Because look at your stochastics. They're still heading down. So you could buy it, but you'd have to be very nimble to make sure that it stayed as a positive trading. Tesla as a short, if it opens lower, yes, that means they're going to the next support level. All right, so we did all those except NVIDIA. There's your gap up in the overbought condition, likely heading here. So here's a few that look attractive. We recommended this one today, the toy company of some sort. And it looks like it was doing a J-hook pattern, but it didn't confirm. It can still be bought, though, if it comes back up through this direction, or through this level. Yeah, Nikola is our next one. There's your gap up, best friend signal. Kind of the same scenario. We started buying RCM on the close today. Because look where this bounced, right off the 50, gapped up. Where do you think your next likely target could be? Up here. And I guess this one was gapping up because they were adding this one to one of the indexes. Abercrombie, no, still wouldn't be afraid to be buying this one because you're still coming out of this fry pan bottom. So you've only had one day of it confirming. I'd still be a buyer of this one on strength. GM, I don't usually recommend GM, but this one's got the same scenario. Let's make this a little bit smaller. A big fry pan bottom. Where did it break out today? Through that level. Now we can make it bigger. And how did it do it? With your best friend signal. So what do we look for coming out of a fry pan bottom? A very strong price move. Yeah, Marshall, I guess, I don't know whether they partner with them. I guess they would call it partnering. Going to do some sort of manufacturing together. But this is a nice little gap up. So active chart, but now it's getting a little bit of steam in it. This one, NETE, N-E-T-E, that broke out of a downtrend. ZYXI, another one that has broken out of a downtrend. And when I say a downtrend, this is where you put your 2+2 analysis together. Kind of a morning star signal right here at the 200, broke through the T-line and broke this downtrend. Where's our next likely target? First target, second target. Is it common to have kept you, nope, I read two lines here. Is it common to have some profit taking the next day when there is a big jump? Yes, but also you got to remember that big jump tells you there's been a change of investor sentiment. So if you're thinking of buying and it looks like it's gotten a little bit soggy, if it opened here and traded down, I wouldn't buy it. But if it turned around and came back up through this level, that tells me the profit taking's over, then you can be buying it. What signals would have kept you in Nikola when it came down to half its body? Nothing. That's not, just because it came down from the top range, it's still a kicker signal. Just because it's not near the top, it's still a good bullish candle. Let me go through a few more here. Let's see. Con, fry pan bottom. Love. Let's get rid of that. That's showing bottoming action. Back up above the T-line, the 50, and doing it with kind of a double doji setup. HIB, got two things to show on this one. First of all, that slow curve. Constantly look for the slow curves because this is usually what creates these catapult moves. So anytime I see a slow curve, I start going after it because the risk reward is if it fails, you're out with a very small loss. If it works, usually the price move is a big percentage move. ACIA, a kicker signal. So here's one that we'll be going through on Saturday. What would be the best option strategy for this with a kicker signal? Could be a 45-degree expectation, so probably do some spreads. And so, again, for profit taking, look what's happening to FedEx. Starting to get a little bit soggy. Hasn't closed below the T-line, but if I was long, I'd probably take off half the position. If it opened lower today, I would have taken off half the position. If it opens lower tomorrow, I hang on to it. If it moves back up, at least I'm still in a 45-degree with half a position in a higher risk situation. If HIB opens, gaps up tomorrow, no. If it gaps up tomorrow, Steve, what type of pattern is it doing? Omar. Oh, Omar was going to be an example of what was happening when you were way up here. It went from 13 to 26. What was the strategy? Go to your 10-minute chart. HIB, I'm probably going to even recommend this one. It might be recommended, but if it opens positive. We got wave 1, wave 2, and where did wave 3 start? With a left-right combo, morning star signal right off the T-line, and then breaking out through this level. What's our next target area? Wave 1, wave 3. If it gaps up a little bit, what do you want to do? You want to get ready to buy, because what's it telling you about this resistance level on a J-hook pattern? It's not there anymore. They're coming in with great enthusiasm. Okay, on the other side of the coin, going short on defend, for crying out loud. This one never comes up over here, and I don't know why. ONEM. ONEM. Very simple logic. If this opens lower tomorrow, what type of pattern is it setting up? Oh, my Jace, I use 2007, which is antiquated, but it's antiquated to the point where I can show the pieces of how you do the scans. The newer ones are probably have all the scanning techniques built in. So yes, you'd have a bearish doji sandwich. If it opened lower, what would be our expectation of the price move? That candle right there. So if that candle occurred, what did it tell us about the support level in here? It's not a support level. We got wave 1, wave 2, now getting ready to flip into wave 3. And Denny's, if this opens lower, could be a big down move. It could be a grand slam. Oh, where's this guy? Get this stuff. That would probably make at least the 50-day moving average your next likely target. And CNK, like your doji, after a little gap up in the overbought area, where's your next likely target? Leaves coming back down and testing the 50. And IB, RK, Interactive Brokers. Bearish left-right combo. This opens weaker tomorrow. Where's your next likely target? Down here, the 200. Oh, Jace, the one we're looking at right now, this is CQG. This was the grandfather of all charting services. As a matter of fact, a lot of the charting services that are out there use CQG as their feed, but I pay like $1,380 a month for it because it's fast. We can go through these sessions a lot quicker than waiting for different symbols to come up. But you've got good charting service like Metastock or TC2000. They're all very good, and for much, much less than this one. Oh, Magic, you lost sound. Okay. Blooming, you can see the wedge. And they broke through the 50. That gives you a good prospect of it heading for the 200. NVTA. Another one that's more than likely coming down to test the support level. Failed at the 50. Depends on which account, SP, whether I short the stocks. If I'm trading one of my stock accounts, I'm shorting the stock. If I'm trading, putting trades in my option trading account, I'm buying puts. And here's Boeing. Another one that did a doji sandwich. Might suspect at least testing this level and maybe even going lower. FT, yes, that is very expensive. Unfortunately, I've been using them for well over a decade, right, almost 2 decades. So you can see how many 66 Cadillac convertibles I'm spending each year on charting. Jace, a lot of people, we went through a process of trying to set up the scanning stuff for TC Thinkorswim, and it is just difficult. So the problem with trying to set up your scans with a trading platform is they're more interested in the trading platform, not your scanning processes on their charts. So after many hours of trying to make it more simple and still not getting very far, I came back to the conclusion of why try to reinvent the wheel? Go to Metastock, go to TC2000. They're not that expensive, and for the money that you're going to pay to have the charting scans on their services, you're going to save much, much more time every month than what you're going to pay for those scan or those softwares. Yeah, there's a few charting services that are free out there. You just have to track them down. That's a question, Chase, to ask in the chat room during the day. Will, I've been using it since 2001 also. That's because when I was in Houston, TC 2000 and TradeStation were giving presentations there. So one of my buddies signed up for TradeStation. Now this was back in 2001. They didn't have the, what do they call it, the T-lines. Still all phone lines. So he bought it. He said, okay, I'm going to start downloading it. He did it at 5 o'clock. He said, you guys come over at 7 and we'll play with it. Well, we all got there at 7, and at 9:30 it was still downloading. So that kind of put a monkey in the woodpile. Okay, so we're still looking at a market that does not have very much decisiveness yet, meaning it's still got the prospects of heading lower. If you're short positions, you stay short, but then you want to watch to see what happens once the Dow hits the 50 and watch to see what the NASDAQ does at this level. I don't think it's going to reverse because your stochastics are still heading down, and you still got the injury of investor sentiment. So right now you just have to kind of, anything that you're buying should have very, very compelling strength. So this is the type of thing that we are going to be looking at during the options weekend of what strategies would be the best for a trade like this, or, darn, which one was the, well, that's just a fine howdy do. I can't even remember which one was the kicker signal. Oh, ACIA. So is this potentially a breakout? What would be the best spread strategy on this? On Workhorse, still will be a buyer of this one. Watch some calls on this one today. Now we'll see if it confirms. Now we go into the next step of the strategy. Maybe I start buying some spreads, a 25-30, because if this starts confirming, what's our expectation for the next price move? Maybe the same potential as this one right here. Okay, we're way past overdue. Much better than work today. All right. Yes. As a matter of fact, I was looking at spread strategies on Nikola today. Oh, work went down after hours? Okay. All right, we're way past, yeah, I was going to let people do trades. I guess we can. When Jim does a double line, just put one in. I'm going to try to close up here. So just one. Etsy, you can go short on this one. Okay, and Jim do the second double line. So we're not scrolling. CHRW, a short. Yes, that's a good looking short also. All right, Glob. Stay short on this one. Look at your big evening star signal, and they broke the 50. Urban Outfitters, J-hook pattern. Slow curve, but no, usually a slow curve is where you can see it's in a trend, and then it does a slow curve. This now I would put more in the classification of a J-hook pattern. Camping World, you can be buying this one. It's not real dynamic yet. wouldn't be afraid to be buying it. CLVS, nothing. Just nothing there. All right, Jace, thank you. Would you send a note to my wife? SFIX, another one that, again, had the big move up and backed off, but if it opens positive tomorrow, it's still confirming, telling you the profit taking is over. Yeah, an ACIA, a kicker signal, you can buy this one. Codex, that is not a reversal signal. Whoops, let's make this big enough where we can see it. It's not quite a kicker signal. You can see it open a little bit below. Doesn't tell you, or doesn't restrict the fact that it's probably going to go up, but it's probably not going to go up with as much resiliency as if this had been a true kicker signal. So anytime you see a signal or a move that's not a signal, just expect there'll be some follow-through, but not with the same vigor as a true signal. The VIX sold off hard today. Oh, boy, I don't know what to tell you there. That'd be a toughie. C-Day, nothing there. Sell signal. Am I looking at the right one? No, that's not a sell signal, but it's not a chart that I'd want to be long or short. Yeah, it's just not a good tradable chart. SMH, stays short. JetBlue, stay long. I think some of the other airlines, Southwest, pushing toward the 200, and Azoo. Nice fry pan bottom. That one can still be bought. Dave & Buster's. Yeah. So you've got a doji shooting star type signal, which tells you it has to open positive tomorrow to want to stay in it. ATHM, ANTM, stay short. Yep. Salerno, Salino, another one. Oh boy, I would have probably closed this one out with it closing back here. The only way to stay long if you're long is it has to open positive. September 18th, 50.55. Yeah, I'd stay with it. Beyond Meat. That's a toughie too. It's not. It's you don't have any trend. It could be a reversal, but I probably wouldn't play with it until it broke out through this level. APT. If you're short, get ready to start covering the short, especially if it comes back up through today's high. All right. And Trill. Trill, you can stay short. It's below, whoops. It's trading at 1310. So it's up here. All right, they announced something. Okay, everybody. Oops, last one. PEB. Just stay long as it stays above the T-line. All right, expect a few more days of bopping around with this market until it gets its feet underneath it. If you're short, you stay short until you see a definite change of direction. So with that, remember, this coming Saturday is a comprehensive option training, and then September 26th is how to eliminate your emotions out of your trading, all the aspects of candlestick analysis that help you do that. So until then, I don't know. Till then, everybody have a good evening.